and I got some neat updates for you. Okay, we're live streaming on YouTube, I believe. I'm not looking at any of you right now. I'm still looking at my Google. Make sure we're on. There we go. Okay, we're live. We're rolling. I'm going to chat with you. It's going to be a talking head with a whiteboard for a little while, and then we'll go to your Q&A. All right. Number one, I'm excited. I'm very excited about this. We've already had line of credits get approved when we couldn't get them working capital. And we've already got line of credits approved for people who already had working capital. It's just been fabulous. When I mean, people who we literally couldn't get approved for working capital loans just this week, or advances, we're able to get them a line of credit. Now, maybe they were customers of ours in the past, but they couldn't get approved now. So a couple things. Number one, I'm very excited about this. This is a way that you can create a residual for yourself through personal customers alone. Renewals happen all the time, but line of credit drafts and drawdowns happen regularly. It's like using a credit card, because you use it, you pay it off, you use it, you pay it off. You have this balance that you get to use. And every time you draw money, you only pay credit, you only pay interest while you have the money not paid back. So if you pay it back a week later, you only pay interest on it for a week. If you pay it back 8 months later, you pay interest for 8 months. But you draw down, and once you pay it back, it's yours to use again. Yours to use again. So business owners love it. And we've always wanted to be in this space, but we wanted to find the right fit to be able to be there for our regular customers who we're already talking to every day. They didn't have to have impeccable credit, etc. So we've got these products, not just one provider. We've got multiple providers, and we're growing that provider list. And as we produce more and more volume, I'm sure that list will even grow more, because production brings attention and people want to be involved. So how does this help you? This is another product your business owners will want to have access to. Maybe they want to know they've got 40 grand sitting around, or 30 grand that they have available to them to use. But they don't want to take all 40 now and pay it back, because they may not need it. But if they can get approved for 40,000 line of credit, they can take 5,000 this week. They can take 7,000 more 3 weeks from now. They don't have to take any of it, right? So it's real convenient for them. And again, much like you, if I said you can have a credit card with a $5,000 limit on it, or I can give you a $5,000 loan and you have to take all 5,000 right now, and you got to pay back 6,800, you'd say, well, I don't know if I need 5,000. I'll take the $5,000 credit limit and I don't have to pay anything until I use it. Yeah. Well, that's better than taking a $5,000 loan and having to pay back, $6,700, $6,800. I'll take the 5,000 line of credit. Maybe I'll only use 1,000 if I need it, and pay it off, and I won't have to pay back such a high interest. So it's a lot less expensive for the business owners who especially aren't taking the full amount. All right. So it's a great convenient thing for business owners. Two things. Number one, this is available for anybody who's a business owner. They have to meet our requirements, but at Monday, I told you it was only going to be available for current clients. We're making this available for anybody who's a business owner. They do not have to be an existing D.A.C. client. Okay. So anybody you want to refer this to today who's a business owner, as long as they meet our eligibility requirements, which I'm going to tell you about, they can apply. They do not have to be an existing D.A.C. client. Okay. So that's great news. We knew all along we were going to do that, but we didn't know how quickly we'd be able to get the web page done and everything else. So we're ready to go now. The website is done. If you go to your website now, you'll see a tab that says line of credit. And we may improve on that, but it's very sufficient for right now. The intake form's live. Everything's ready to go. Replicated into your website. It's ready to go. If you share that page on Facebook, it's going to put up a nice image. All right. So that's all good. Don't go there now and look at it, because then you'll miss what I'm covering, and then you'll be asking questions about what I'm talking about, or not knowing what questions to ask. Okay. But know that it's live. Line of credit. Here's what you have. They can get between $5,000 and $100,000 approved for. Now, there's requirements, obviously. It's not someone who's doing $3,000 or $15,000 a month in revenue and barely meeting our minimum requirements and having a low average daily balance isn't going to get 60 grand. All right, let's be real. There's a reason it's as low as 5,000, yet the minimum required is 15,000. All right, some of these people have 550 credit scores. That's not, they can't get approved for a car and they're getting a line of credit, right? They can't get approved for a credit card and they're getting a line of credit. So let's just keep expectations real. If someone goes, I want 100,000, okay, well, you got to be doing a lot of revenue to qualify for 100,000. Okay, a lot of revenue. Like you got to be able to qualify at least for 100,000 working capital advance, right? It's still the same money. You can take it all today. So just know that it's not easy to get 100,000. All right. But you can get 5 to 100,000 is what the credit line is. It's a revolving line, means once it's paid off, you use it again. If you take 10,000 now against your 30,000 line of credit, you pay that 10,000 off, you have 30 more you can take again. So it's constantly revolving. You pay a draw fee and you pay a balance fee. What does that mean? As you take money, you pay a fee. And as you have a balance that you haven't paid off, every week you pay an interest charge on that balance. All right. So the longer you hold it, the more it's going to cost you. We do have different programs in our draw fee. I told you it's 3%. That is a lot of the cases. But we do have some line of credits that have zero draw fee. You don't pay any draw fee when you take money. Okay. But you pay a monthly fee of $20 a month. Right. So we're just saying draw fees are 0 to 3%. All right, for your own knowledge as an agent, the website doesn't mention what they are because we have so many different options and it all depends. Well, we do say there's a draw fee and a balance fee. Sometimes the draw fee is going to be 0. Sometimes it's going to be 3%, right? Balance fee, what that means is, let's say you have a $50,000 line of credit and you take 10. Each week, they're going to charge you a percentage. Let's just say it's 0.75% per week. Let's just say that's what it is. So you take $10,000 that you've taken off times 0.75%, that'd be $75 you're going to pay this week to have that money out. If you pay it all off next week, it only costs you $75. Okay. And you got that 10,000, you paid it back a week later, it costs $75. But if you hold it longer, next week, it's going to charge another whatever your balance is times 0.75%. So maybe it's only $73 next week because you paid some down. And the following week, it's going to charge you again. All these are set up with however much money you take out, they're going to give you a weekly payment to pay it off within 6, 9, or 12 months, usually 12 months. So if you take 10,000 draw, so you have a $50,000 line of credit, you take $10,000 right now, we're going to figure what does the payment, if you took it all now, what would the payment be to pay it back in 12 months if it was a 12-month term? Okay. So let's say you take 10,000 and they figure out the payment is whatever it is. Just call it 300 a week. I don't know what it is. 500 a week, 1,000 a week. I don't know what it is. But let's just, whatever that amount is that you've committed to paying for that week, you pay that every week. 1 year, that 10,000 will be paid off with the interest. All right. If you decide to pay it off early, there's no penalty and you save big. So your minimum payment must be paid every week. It's a weekly auto payment, but you're not restricted to only pay that. You can pay it down and save a bunch of interest because, again, you're only paying a balance fee while you have a balance, just like your house. If you have a mortgage, you pay a fee every month that you have a balance on whatever that balance is, right? Okay, so that's draw fee and balance fee. Again, sometimes it's 0. Draw fee. You take 10,000 out. If it's a 3% fee, you now owe 10,300 back. So your balance is 10.3, even though you only got 10. So the provider's making $300 on that because you may pay it off next week, right? And they only make $75 on that. So they're making the 3% plus 75. That's one provider we've got. Another provider may be 0 draw fee. You get 10,000, you only owe 10,000 back. But they charge you monthly. Once you get this, you're charged monthly for the line of credit, $20 a month. Okay, so $240 a year just to have it with that provider. So it all depends. We have different providers, different terms. All right, that's your draw fee. Balance fee is, again, the percentage of whatever your balance is. You can get up to 12-month terms. Some maybe 6-month, 9-month, or 12-month. You want to get the longest term you can because it keeps your payment down. You can always overpay, right? But have a lower fixed payment, a lower guaranteed payment in case cash flow struggles, and overpay if you want. And that way you don't have to worry about having missed payments or that type of stuff. But it's weekly pay. Prepay to save big time, no penalties to prepay, but big savings. Auto weekly payment. So I've covered the line of credit. I'll give you some scenarios again in a minute, how you can pull against this, etc. Qualifications, got to be in business 1 year. I know Monday we said 2 years, but it's 1 year only to be in business. Some providers require 2, some provide 1, so 1 year is the minimum. 550 plus FICO score, okay? 15K a month in revenue, each of the last 3 months minimum. The stronger your business is, the stronger the line of credit. These are the minimums, folks. This does not mean you're approved. These are the minimums to apply to be eligible for application, okay? If they've been in business less than 2 years, this is a key. If they've been in business less than 2 years, or they're in one of these states, New Jersey, California, Rhode Island, Nevada, Vermont, or Montana. If they're in one of those states, or they've been in business less than 2 years, their FICO score must be 600 plus. Okay, so we've got if-then statements, right? So it depends on the provider. There's different underwriting criteria. Again, we try to systematize all this into one mesh, and we've got a framework, a lattice of different providers that this you can be said, and we can help get a client. Now, if they've been in business 1 year only, that means they need a 600 credit score, right? Right? Not 1 year and 550, that doesn't do it. That's why there's a star there. So just so you know, 1 year is the minimum, 550 is the minimum, 15K is the minimum. But the reality is, if they've only been in business 1 year, they need a 600 FICO score. If they are in New Jersey, California, Rhode Island, Nevada, Vermont, or Montana, they need a 600 credit score. Okay, so there's a couple caveats there. That's qualifications. All right. Now, they also need other things. That again, that's not the. If they got a poor average daily balance in their bank account, they're going to be declined. If they've got a bunch of NSFs or days in the negative, they're going to be declined. If they've got a bunch of defaults in our space, they're going to be declined. Some providers don't allow you to do this if you've got other lines of credit. Some say it's okay. Some say you can't do this if you have a bankruptcy. Some say we'll overlook a bankruptcy as long as the business is strong. So keep in mind, there's many reasons someone gets declined. This does not guarantee approval, what I put up there. These are the minimum to apply. Every week we see someone say, hey, my customer met the requirements and didn't get approved. Why? No, that's the eligibility to apply. It's like when you want to go apply at Harvard, they say your eligibility to apply is a 3.8 GPA to apply. Doesn't mean you're getting in if you got a 3.9. It means don't apply if you don't have a 3.8, because you're going to be declined for sure. You'll still probably get declined, but don't even apply if you don't have a 3.8, right? Same thing here. Don't apply if you don't have a minimum. Doesn't mean you're going to get approved. But on our other funding, 80% of the time they get approved. We're being told it's about 75 to 80% of the time they'll get approved here if they meet our eligibility requirements. As long as they don't have something else that's, causing problems that no one would want to give them money for, right? It makes sense. All right. So let me give you a couple scenarios about the product and the qualifications. So let's say you start out and you're approved for $50,000. Your client is $50,000 line of credit. All right. And they take just, what is that? 10,000 of it. Okay. They take 10,000 right now. Some of our providers, they owe 10.3 back, right? Some of our providers, they don't owe anything back except the 10,000. So some is 10.3 because there's a $300 draw fee. See that, right? $300 draw fee, which is 3% of the 10,000. So they owe $10,300 back now, minimum. That's that provider. Other provider may say there's no draw fee. You only owe 10,000 back right now, but you have to pay $20 a month now forever, as long as you have a line of credit. You want to keep this for 6 years? You're paying $20 a month for 6 years. You see the difference? If you're using it a lot, this is better. If you're not using a lot, this is better. There's some competitive differences here. If you don't ever use your credit card, you don't want to have to pay $20 a month on it. But if you had to pay 3% every time you use it in a draw fee, you'd say, hey, I use it a lot. I'd rather pay 20 a month and not have that 3% fee. So there's variations here. Does that make sense? Good. So now you owe 10,300 back, let's say. Let's use the 3% draw fee. You owe $10,300 back. And they figure out over 12 months, let's just say your payment is, just throw out 12,000 divided by 52. I don't have my calculator, but let's just say 12,000 divided by 52 would be, or let's say 14,000 divided by 52. 50 into 14,000 would be 200 plus 80, 280. So about 280 a week, let's say you're paying. Okay, so you're going to pay 280 a week on that. And if you pay 280 a week every week, this is just ballpark, these are not specific, 280 a week every week for a year, you'll have paid off that, let's just say. Okay, it's done. Paid off. Because you're paying the 10.3 plus interest percent cost, right? So maybe you paid 13 back. All right, but whatever you paid back, it's figured out in this weekly payment. And let's say you paid 2 payments, 3 payments, and you still owe 9,700, let's just say, but you decide to pay it all off. You send them 9,700 bucks because your business is thriving, or whatever you invested that 10 grand into turned into a bunch of revenue. You pay that 9,700 off. You're done paying it. You don't pay like in our working capital. If you get 10,000, you got to pay back, just call it 14.5. And if you pay it off early, you still got to pay like 14, right? Or 13.8. You still pay most of it. You get some discount. So this, you pay it off early, you're done. You don't owe that money back anymore. And it only costs you 3 weeks of interest. And we already said was your balance fee times your balance. 10,000 times, call it 1% for simple math. It'd be $100 every month while you have it, you're paying, plus the draw fee. So it's very, for someone who only needs bridge money for a month, this is real inexpensive. Real inexpensive. Or 2 weeks or 6 months or 5 months. Very good. All right. And then once you pay it off, you have 50,000 available again. If you took 10 right now, let's say you owe 10.3, and then 3 weeks from now you go, I need 15,000 more. You just take it. You say, I want 15 more. And there's the 15 more. But now you owe 25,000. You pay another draw fee, 15,000 times 3%. So $450 draw fee you just paid. So you owe 15,450 plus the 10.3 minus what you paid back already. So now you owe, now it's 15,450. You're at 25,750 minus what you've paid. Let's say you paid 750. You owe 25,000 still. Now your balance fee is 25,000 times, just call it 1% for the week. 250 a week. Now it's going to cost you to hold that money until it's paid back. Okay. And again, your weekly payment is paying principal and interest to pay it off in 1 year. Principal and interest paid off in 1 year. How it's being charged is there's a certain amount being charged on your balance every week. Okay. And so you don't need to follow that so much, except when someone says, well, how do you determine the cost? Well, some of our providers charge a draw fee and you pay that every time you pull money out. And then there's whatever your balance is that you owe. Every week they calculate an interest charge on it, just like your mortgage does that, but they do it every day, a small fraction every day. We take a certain cost and you're told that cost up front, what your balance cost is by week. So you're told that. Wade tells you that up front. Your balance cost is 0.69% of your balance every week. Yours is 1.39% of your balance every week. It all depends how credit worthy you are in your business. All right. So that's how that works. It's a revolving open door of credit capital. All right. Wade, is there anything you want to throw onto that before I go into the process of how to sign up customers and the comp plan?
No, that was real good. And I will tell you though, what you're going to see on when people do not qualify, you're only going to see one statement. It's not going to, you're not getting a reason why. You're going to have one statement that's going to say they do not meet credit requirements. That's all we're getting. I'm not going to go into it because they're not going to go into it with me. There's, like you said, David, they're looking at daily balances and everything. So when you say, well, man, they got a 700 credit score, how did they get turned down? Well, The reality
That's
is they
the
haven't
other
paid
thing.
anybody in 3 weeks. Yeah, exactly.
Yeah.
And they don't even have enough money really to make payments on what they got, but they got a good credit. That's
Yeah.
it.
Yep. So, great point, Wade. Yeah, credit score is not everything. It's just a minimum requirement, but it doesn't guarantee a thing. One thing I want to say is these are different than the working capital advances. Some of our providers, these are actually loans who they report to credit bureaus, to your business credit bureaus. So these are treated differently as far as credit underwriting, and we are not allowed to be told why. So it's not just that they won't, they can't tell us why. Just like if you go apply for a Citibank Visa card and you're turned down, they can't tell you why. They say you'll get it in the mail. And you get a letter that says you turned down for credit reasons. We use this credit bureau and this and this and this, and you're just turned down. So it doesn't matter if you're a broker, if you're a super duper broker, if you're a grand poobah broker of all brokers, of all brokers, and you've helped fund billions of dollars, you're never going to learn the reason why they were declined, nor are we. Okay, so just know that going in. If you're not good enough with that, if that's not good enough, there's nothing we can tell you differently than that. Okay, so we've talked about the line of credit product. We've talked about the minimum requirements. They're all on the website. Process is just like our current D.A.C funding. Okay, they're going to go to the website. They're going to click on get qualified. They're going to fill out the basic form. They're going to upload their driver's license, 3 months bank statements, and a voided check. Well, they're going to get an email to them, and you're going to get an email to you that you've got a prospective line of credit customer. Okay, they're going to get an email saying, "Hey, great, you just need to sign this, sign and complete this one-page document so that we can go secure your line of credit." And it's the one-page simple application. All right. They complete that and send it back to us. Until we've got that back, there's nothing we can do for them. This is not an online signature. This is a paper signature. We've got multiple providers who will not even look at it without what they call a wet signature. Okay, so this is not an online, easy, simple form. It's an easy form, but you got to take that document and sign it. We're going to reach out to your clients via email. We'll probably text them, but we're not going to be chasing them with phone calls like we do the working capital. We're going to, nor do we do it there either. We call them a few times and then we're like, we've emailed them, we've texted them, we've called, they're ignoring us. We just can't keep chasing them. Early on, guys, just so I had a thing before I even met Wade. I had a thing where we'd call a client every single day until we heard yes or no. And it got to the point where I couldn't keep people on staff. They're like, it's ridiculous, Dave. I'm not going to keep chasing people. Don't call me back. I've left them 5 voicemails. I've called them. I've emailed them. What do you want me to do? I don't want to do this anymore. I'm chasing people who aren't interested, obviously. And so finally I realized, you know what? It is a waste of time. You guys are agents. You get a status update that we've got partial documents. All that means is we don't have a signed application yet. Reach out to them and find out if he or she wants to proceed or not. Get that signed application. All right. So when they fill that signed application out and send it back to us, we then go to work securing their offer for them. Here's the good news. Every one of our line of credit providers, I shouldn't say everyone, but our line of credit providers also understand we're in working capital advances. So sometimes they're going to prepare us with both offers. They're going to say, here's a line of credit offer that we can give them, and here's a working capital offer in case they don't want the line of credit or in case it's not high enough, or et cetera, et cetera. So there may be times when you have someone apply for a line of credit who ends up getting a working capital or both. Okay. It could happen. Don't promise that to anyone. It'll be rare, but it could happen. All right. So just know that's the case. That's the process. Real simple. You don't have to collect documents. They upload it all, but they are going to have to upload driver's license, voided check, 3 months bank statements in PDF form, They don't print their transcripts. That's not bank statements. I'm talking about what they get mailed to them. You can download them from, I don't know of a bank you can't download your bank statements from. It probably exists, but everyone go into your online bank and just say, I need to download my statements. And you can download 3 months right now into your computer and upload them right into ours. Okay, real simple. So that's the process. Commission process I'm going to talk about now. This is where it gets probably the most complex thing about this is the commission process and the tracking of commissions. All right. We're paying with the same D.A.C pay plan we have now. So nothing's changed there. As you know now, we have a funded value on every funded advance or loan, right? And it's usually the funded amount. Someone gets $10,000. Usually the funded value is $10,000. Then what do you pay? You're paid 3% or 6% of that $10,000 funded value based on whether you're amped up or not. If you're amped up, you get this. If you're not amped up, you get this, right? Plus, in addition to that, you earn overrides on all of your open lines income. Well, you're in your open lines, so you get overrides on yourself, right? Of anywhere from 10% all the way up to 50%, you make of this number here. So if you're at the 10% override mark, you get 3% plus 10% of that, whatever that dollar amount is. If you're at amped up, you get 6% plus 10% of whatever that dollar amount is. So you get a 10% raise over your 3 or your 6 on your own personal clients. If you're at DAC 2, this is 15%, right? If you're at DAC 4, this is 30%. So if you're at DAC 4 and you go get a client at $10,000, what do you make? You make 3% of 10,000, which is 300, plus you get 30% bump onto that 300, so you make 390 if you're not amped up, right? You make the 3% plus the 30 on that. If you're amped up, you make 6% of 10,000, which is 600 plus 30% of that 600, which is another 180, so you make 780. 390, 780, 390, 780. Same client, different consistency for you. If you're more consistent, you're amped up. If you're less consistent, you're not. How do you get amped up again? One new client, renewals don't count for this. One new client amps you up for 30 days. So anytime we get a client, and this is important because I go on to the next step, it'd be like, what's he talking about? Anytime we get a new client or a renewal client, anytime we get a client and there's funded value of 10,000, we then look back, we track back and say in the last 30 days, did this agent get a new original funding to make them amped up? Yes. Then they're amped up and they get 6% plus their revenue share on themselves, whatever rank they're at. We look back 30 days. Did they get a client in the last 30 days? No. They're not amped up. They get 3% plus their revenue share. So it's not that you have to get a client every month, but when you get a client in the last 30 days, you better have gotten a new client. Otherwise, you get paid half. It's not that you get paid half. You get paid double if you're on this. Harlequin, I saw that email you sent me today. Thank you for that. I glanced at it quick. What I thought was interesting is the referral commission they pay. 2%, right? Sometimes up to 4%. Which is fabulous. I mean, that's good money. We're paying 3 minimum, 6 as long as you're consistent. So thanks for that, by the way. I'll give it a look and pay more attention. We've been focused on this launch, so I didn't really read that yet. Okay, so that tells you how you're paid on funded value. Well, what's funded value? On an advance, usually it's the amount you get. Like Bank Breezy, it's the amount they get the first funding, but after that, if you've got first funding, let's say someone gets 10,000, it's 10,000. But renewals at Bank Breezy is paid at about 70%. We get paid a significant portion left. Maybe it's 80%. I don't know. My computer, the spreadsheet does it now. But whatever it is, it puts in maybe it's only 8,000 funded value. Even though they got a 10,000 renewal, it may only be 8,000 funded value for each renewal on Bank Breezy. It's reduced somewhat. All right. Not always, but on Bank Breezy, it is always, because that's the agreement we have with them is we make less on renewals. Other providers, the renewals aren't reduced. Okay. So whatever the funded value is, we pass through. We don't take and keep, we pass through. If we make more, you make more. If we make less, you make less. All right. So with that as a backdrop, funded value is what matters. Nothing else changed. We pay the same pay plan on the line of credit. It's just what is the funded value on that draft? Because we make a lot less. Lines of credit pay a lot less. So this is the way we do it. funded value of a line of credit equals 30% of their draw amount. Okay, so what that means is someone gets a $10,000 draw. They draw 10,000 of their line of credit. What's 30% of 10,000? $3,000. That becomes the funded value that you're paid on. You don't get paid on 10,000. You get paid on 3,000 funded value. Well, what do? We look back over the last 30 days. Have you gotten a new client in the last 30 days to get you amped up? Yes. Oh, right. Good for you. Then you're making 6% of this 3,000, $180 plus whatever DAC 1, DAC 2, DAC 4 override match you get. Make sense? The last 30 days, did you get a client, new client? No, darn it. Okay, well, you make 3% of that 3,000, $90 plus whatever your revenue share about dollars are, 10%, 15, 30% more. Okay, so that's how this is treated. Now, 2 weeks later, they take another 10. Well, guess what we do? We call it 3,000 funded value again. And the same procedure. We look back 30 days. Have you gotten a client in the last 30 days? And we're going to talk about qualifications in there, but I just want you to know the funded value right now. So every draw is 30%. Whatever the draw amount is, funded value equals 30% of that. If they take 40,000, what's 30% of 40,000? 12,000. You're paid on 12,000 funded value. Now, here's the cool thing about line of credits. They use them. A lot of people use these as like 2-week bridge loans, and they'll take 30 grand and pay it off in 2 weeks. And 3 weeks later, they need 30 again. They take 30 again and pay it off in 4 weeks. And then 4 weeks later, they take 40,000 out again and pay it off. So we believe you'll earn more on this than the working capital because of how often they draw them. And this is what I'd say. If you got a $5,000 one-time loan from your local bank, or you had a $5,000 credit card, which one do you think has more use on it? The $5,000 credit card, you use it every month. For those who do. And if you're a business owner, you need working capital regularly. You got, I got to wait. I can't purchase that refrigerator, even though spring break is coming up. I can't purchase that refrigerator for 3 weeks from now until my bank account gets better. No, I can put it on my line of credit. Done. I'll get it now. I'll put it in here in 3 weeks from now. I'll pay it off when my sales pick up. So they don't have to hold off. Lines of credit, business owners love it. Okay. Many people use their working capital as a line of credit because they cannot get approved for a line of credit. We now are bringing the approval rates to a lower credit threshold, lower revenue threshold, no collateral required. That's unbelievable. Okay. In fact, that doesn't say this here. No collateral. Did I add that there? No collateral. It's on the website, but okay. Now, here's the, hopefully this has been clear so far. Here's the only part that may be, well, maybe you've been confused already, but this is the part that causes potentially a little bit of confusion. It is this. When does a line of credit customer count as a new funding for qualifications? No. Does a line of credit count as a renewal customer for qualifications? No. Unless they do a certain amount of drawing. You give someone a line of credit and they don't do any drawing, we're not going to give you amped up status and engaged status and cut into our, what we call breakage, which we built into our pay plan so that we pay the producers a lot more than even we're making. And then we, because the non-producers are producing less consistency, we can earn a little bit more on. Okay. Not just them, their enrollers make a little less because everyone gets paid on whether it's 3% or 6%. The uplines are paid on, what did they earn? Did they earn 3 or 6? A lot of people are not engaged. So it's only 3%. That saves us half on everything, right? But if there's a 6 over 6, we've lost. We didn't make money on that deal. We lost, but we've designed it that way. We're okay with it. So we can't just give qualification away. You have to have revenue to qualify. There's got to be actual revenue, and a certain amount of revenue has to come into the company for it to be called an amped up qualified customer or an engaged qualified customer. So this is what we did. We just use the same thing with their funding. We said, how much do we earn on this? How much did, blah, 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 blah. Okay, this is what we need to earn to be engaged customer, and we come up with a dollar amount. $20,000 in drawdown. If they've drawn $20,000, it counts as a customer. When they draw 20, it counts as a customer. They don't have to do 20 the first draw. They can do 5,000 every month for 4 months. On the 4th month, boom, they count as a qualifying customer that month when they hit that 4th drawdown. So as soon as they accumulate for $20,000 or more, 20,000 plus, 20,000 is good, 20,000 or more, they count as a amped up customer if they are new. If they're an existing customer, you already got your amped up qualification on them, but they'll count as a renewal then. So they count as a customer for our amped up and our engaged qualification every 20,000's draft. So let me give you a scenario. Someone gets started, they're a brand new customer, they don't have a working capital advance. They sign up with a line of credit, they're going, thank you, and they get approved for 40,000. Do they count as an amped up customer? It's over 20. No, they haven't drawn any money yet. They're just approved for 40,000. They haven't taken a penny. So they're approved for 40 and they take 25,000 the first week. Is that more than 20? Yes. So the first week you'll get a commission statement that says, congratulations, you have a new line of credit customer and your funded value is 25,000 times 30%, 7,500. Your funded value is 7,500, right? The drawdown value is over 20,000. This counts as a qualifying customer for you. And over here on the right on your spreadsheet, if you've ever gotten a commission statement, we put over here your number of qualifying clients, and we put 1 there because you now have 1. They're over 20,000. It would say 1, and then it would say your amped up date expires 30 days from today. Would be filled in here. Your engaged date expires 60 days from here, would be filled in. And you know your amped up date expires 30 days from the time this client drew their 20 grand, and your engaged date is 60 days from this time. So we tell you this in the commission statement. You'd see it. Okay, hopefully that makes sense. Now, what if though, their first draw, they only drew 15,000? Well, is that over 20,000? No. So does it count as a new customer for amped up yet? No, not yet. It's not a complete customer point yet. But do you get paid on the 15,000 draw? Of course you do. So what we do is 30% of that is $4,500. That's your funded value. You'll get a commission statement that says you got 4,500 funded value. You make 3% of that, or 6, depending upon what level you're at. 3% of that is $135, or 6% of that is $270. And you'll get that paid to you, but you don't have a qualifying customer yet. Now, next month comes and they draw down 10,000 more. Their total drawdown so far is 25. Does it now count as a qualifying customer? Yes, because they surpassed 20 in total drawdowns. It could take them 4 years to draw 20,000. It won't, but it could. When they do, boom, you'll get, so we're tracking the amount of draws per client. And when they surpass 20,000, that's when we give you qualifying volume for it, or as a amped up customer, if it's new. Okay. So in this case, they did 10,000 in funded value. Let's go through the exercise with me. What's 30% of 10,000? 3,000. So that becomes the funded value. You're going to get paid 3% or 6% of that 3,000 funded value, plus your leadership override rev shares, right? Those bonuses on top of that. And you're also in your email going to get a statement that says your funded, your draws have accumulated past 20,000. So this now counts as a new customer for you. So your new customer count will change on your commission statement from 1 to 2, or 2 to 3, or 3 to 4, or 7 to 8, or whatever your number's at, it will bump up at that point. So it's now a qualifying customer. So let's go through a little further now. Let's say they're brand new. You're now amped up for 30 days from that date. Whenever they got that second draw, you're amped up for 30 days from that point forward, right? Yeah. Now, let's go a little further. They go out, they do $15,000 more draw. Let's say they do it 4 months from now. doesn't matter when, but 4 months from now, they drew another 15,000. Every 20,000 new they do after a threshold counts as a customer again. So they did 15,000 new. This got them amped up, but now they did a $15,000 draft. 15,000 times 30% is 4,500 funded value. You're going to get paid your 3 to 6% plus bonus on that 4,500. And now you've got 15,000. It doesn't count as a renewal customer yet. It doesn't count to keep you engaged because it's only 15,000. But if they draw 3 months from now, another 5,000, did they get to 20,000 or more new draws? Yes. And now they count as you'd now be engaged for 60 days, just like a renewal customer counts. So it's just like you got a working capital advance for 50,000 and then they took 20,000 8 months later. And when they take that 20, it doesn't count as a new funding, but it counts as a renewal for getting you engaged, right? This would be an engaged drawdown, this 5,000. Of course, you get paid on it. So you get paid on every drawdown, 30% of the draw amount times your pay plan qualification, you get paid. But you don't necessarily get to count it as a qualifying customer unless it's done 20,000 in drafts. Okay. And now I purposely use these numbers for the questions that I know will come up. Well, David, this is 25,000. So is it every 20,000? So when they hit 40, it counts as a engaged, and 60 and 80 and 100? No. It's 20 new after the one that got them qualified. So this one took 25 to get them qualified. So, and this one's 15, you need another 5. Yeah, but Dave, they're at 25 and 15, they're already at 40. If they would have done 20 and 20, I would have gotten my qualified here and I would be renew here. It'd be an engaged customer for me because I've done 40. And so why don't you give me the qualification as if they did the 40? Because we've designed this on, it's really going to be probably 43 to 47, every 43 to 47, or I'm sorry, every 23 to 25 of funded value before we actually give that amped up or that qualification away is what we figured on. So we use breakage. We built breakage into how much do we need them to do. We need 23,000 instead of requiring 23 and letting it be 23 and 46 and 69 and making it real difficult. We just said, once you surpass 20, that money's already been used. Now you need 20 new. And once if this one's 15,000, you did 20, boom, you'd be right here. This counts as a renewal customer. You're now engaged, qualified for 30 days, but you need 20 new now from that point forward to do it again. So check this out. This is what makes me excited. And then we'll take your Q&A. Here's a month's time. You got your working capital advances. They pay the most money up front. No question about it. Don't slow down on that. Keep helping, keep funding those, keep doing that, helping businesses who need 300,000 now, 150 now, 8,000 now, can't get approved anywhere else, all that. Keep driving that. But where the line of credit comes up is, let's say you have 4 line of credit customers that you got. And this one's got a $5,000 line of credit. This one's got a 35,000 line. This one's got a 10,000 line. And this one's got a 60,000 line. Okay, whatever the amounts are. Every time you have someone surpass that $20,000 mark, bing, a new 20, bing, counts as a qualifying customer. Bing. So you get the client here and they draw down 20,000 by here, boom, you got a new client. Counts as amped up. You're amped up to this point. And then this one here drew 5,000 every week and bing, they hit 20,000 here. Boom, check. You got another new client. You're amped up again further. And then this one here does 20,000 only every 6 months, but boom, here you got a ding, a new client. And then this one now renews 20,000 more. Bing, you got an engaged client. You got a renewal client here. This one just renewed. They did 20,000 in drawdowns. So they count as a renewal for the pay plan. They count as you're now engaged, qualified for 60 days. Do you see how you can get yourself by getting enough of these line of credit customers who are actively using it? You'll always be qualified, engaged. And new ones will get you amped up. New customers are always required to be amped up. But old customers can keep you engaged, qualified to get paid on your override bonuses and your enroller bonuses. So getting a lot of line of credit customers secures your engaged, qualified for a long, long time. Make sense? Working capital gets you amped up. First time drawdowns and first time line of credit customers can, if they're new, they can get you amped up as well, but only once. Just like working capital can only amp you up once. And keep in mind, amped up recruiting, with amped up, enrolling and amped up, and they're both DAC4, we actually lose money. And that's not DAC AD, RD, ND, all those. It's just DAC4 over DAC4, both amped up. We actually pay more than we get. So yes, you got to get new clients to be amped up, because otherwise we're losing money to have people just maintain old clients who aren't really producing as much revenue. All right, so I'm excited because I see this being a tremendous residual stream for all of you. It's a real easy product to understand. You get a guarantee. Most people know credit cards. It's like a credit card, except that the approval amounts are higher and the interest rates are generally lower because we force you to pay it off in a year instead of hoping you don't pay it off for 20 years. Credit cards will give you a real low payment, but you're only paying interest and a little bit of principal. And they just keep charging you. What you're paying and your monthly payment is really almost all interest. You never pay the balance off. This isn't that way. It's designed to be paid off in a year. So you're going to pay a higher payment up front weekly, but it's paid off in a year. You'll pay a lot less than the credit card, and the approval amounts are higher. And again, you can pay it off early and end that. So let's go to your questions. Wade, first of all, is there anything you want to add to anything I said before we start taking questions?
There sure is. I got two things. Number one, on lines of credit, we don't have to pay off anybody. And that's the beauty of it. You can have 3 or 4 MTAs out there as long as your daily balances are in check. You just don't have to pay anybody off, and you don't have to pay any lines of credit off. Also, when someone comes to you and they say, "Listen, I've got a 25,000 line of credit. I'm pretty much maxed out on it right now, but I need another $30,000." I can always get an MCA and give them that funding, because of the fact that lines of credit don't matter. They don't look at lines of credit as a position. So this is kind of a win-win on every scenario.
Hopefully so that goes both ways then, Wade, right? If someone's got them, you can get them a line of credit even though they got MCAs, but you can't get them another MCA usually if they've got too many. And if they've got a line of credit maxed up, you can get them an MCA, and it doesn't affect it because the line of credit's not an MCA. So MCA companies will give you an MCA even though you have a line of credit. So
That's
we're
right.
helping both ways. Now they can take the MCA to pay off a line of credit too.
Yep. And in a lot of cases, I'm going to be making an offer to them of, let's say, a line of credit of 50,000, and I might make another 60,000 on at the same time, and give them in other words, let them say no, but I want them to know is available to them.
Yep. Beautiful. Love it. Thank you, sir. All right, let's go. Morgan or Sharon, was there anything you wanted to add from what we talked about earlier? Anything that I shared with you that I didn't share on here? I don't think so, but.
I think you covered it all.
Okay.
Yep, I was going to say the same.
All right, cool. Well, that's good. So let's go to your questions then. Let's go to Matt DeHame first, because Matt has actually gotten a client funded, and Matt was one of a few people who I asked to look at the website in advance and give me some feedback, and I'm glad he did, because there's now an asterisk talking about some states at the very bottom of the site and a couple other things. So thank you, Matthew. What do you got for us, buddy?
Okay, so it gets better and better every time. It just never ends. Okay, just 1 year in business. Let's go to New Jersey, California, all the 6 states. Everybody should take a note of them. 1 year in business, and now this is the double caveat. It's okay. Now you change it to 600 plus FICO. This is for Wade. Can my clients who do have a 600 plus FICO in New Jersey, with or without an MCA existing, are they good to go for funding now with one of these?
They're
other
good to
partners?
go for
apply. That doesn't mean
They're good to go to apply.
That's what I
That's
meant.
right. They're good to go to apply, Matthew.
Wow. Well, obviously, yeah, they can be declined, but they're eligible. Is the word. I think
They're
the word is
eligible.
eligibility.
I will
And,
say this, Matthew, the lower the credit score, the more they're going to require monthly.
Of course,
So if someone's at 615, they're like at the barrel of the minimums. So if they're at 600 and doing 25, it's a lot better odds than 600 at 15. Just like 550 and 15 is a heck of a lot harder to get approved than a 550 with a 32 or a 15 with a 600.
case by case. But my whole point was the great news is that I've got, right? I've got New Jersey was like, oh, I'm sorry, I can't help you. Even if it was like, oh, and I had a list of them, and now they're open, and that's really exciting. But here's
Matthew,
Yeah.
this, as much as they can do this does add risk.
Oh, yeah.
So they may do a line of credit if you have MCAs, but if you got a few of these, that's it. You've just added more risks. So now if you're at the minimum, this, you're probably going to get declined. But
yeah, I understand the balance and they figure in the variables, but nevertheless,
if they've ever lowered payments with anybody in the lending space, it ain't not getting funded with anybody. It's just until they get that one paid off. It's just the way it is.
Got it.
That means they lowered it because they couldn't afford it.
Understood. Yeah, that's a high risk. Well, okay, so one more question. I just had everything's fantastic here. 30% funded value with all the providers because they're paying us a 30% funded value for all the MCAs. All right, that's it. The 20,000 threshold is exciting. It's very generous for the county as an amped up for new clients. So when they accumulate the first 20,000, that counts as an amped up, and then the next 20 would be
if they're new. If they're
new,
new,
that's what I'm saying. They're new clients. Yeah, fantastic. Rock and roll. I can't even tell you how exciting this is. I can't wait till this training's over so I can get on the phone.
All right. Well, the website's live, so
I know.
feel free to share. Let's go to Domino, who had her hand up first. Domino, what do you got for us?
Holy shit.
Okay, hi David.
Hi,
I have a question. So I had a guy, he applied and he got approved. And I had just talked to him and he said that he was like hesitant to do a daily payment. But so now can I call him back and tell him that he could do the business line of credit?
Yeah, he can apply for the line of credit as long as his sales surpass 15,000 a month. Line of credit has that minimum requirement, but absolutely.
He'll just call in or what?
No, he fills out the form in the website the same way. Did he just do a D.A.C loan or a Bank Breezy?
D.A.C. He got an offer.
Then tell him to email his contact, which is probably Brad, maybe Wade, whoever his point of contact is at D.A.C, and tell him he just learned of the line of credit and he's interested in that.
Okay, I will. Thank you.
They'll move it over. He doesn't need to reapply.
Okay, thanks.
All right, great job, Domino. Thank you. All right, Minor Henderson, you're next, Minor.
Hi, David. Can you hear me?
Loud and clear. What do you got for us today?
Yes, I was wondering, can a client get a working capital and a line of credit all at the same time if they meet our minimum requirements?
Getting both at the exact same time. Wait, I don't think we can do that, can we?
The way it works is this: you got to, you can't always, but sometimes you absolutely can. But the way it works is you have to take, to get them both, you have to take 60% of the offer that was made on the funding side. So if you don't take 60% of the offer, you can't get both.
Okay.
So they get 100,000 offer, you at least have to take 60,000 of it if you want to get a line of credit. And that's assuming you're given an MCA and a line of credit from the same company, right, Wade?
That's right. That means it's same from the same one. There could be a situation where they get a line of credit and then I go to another company and get them the MCA.
Yeah, Wade discloses this stuff to the providers though. So when I say it's the same provider, to do it at the exact same time, it almost all has to be the same provider. Once in a while, he can say, hey, I got him a line of credit approved over here. Do you want to give him an MCA? And then they take the line of credit over here. And so there's some disclosure that happens, and it sometimes can happen at the same place, or different places, but usually it's the same provider if it's the same time. Now you may get an MCA now and 3 weeks later get a line of credit from somewhere else. Is that true, Wade?
Oh, absolutely.
Okay. All right. Did that answer your question, Minor?
Yes, sir. Thank y'all so much.
Thank you. Erica Cilliason, how you doing, Erica? You're muted. There you go.
Yeah, hey, this is awesome. So am I under the correct understanding that this is no longer just for existing clients, that it's anybody?
It is. It's for anybody.
Okay, that's awesome. I'm stoked.
Yeah.
And then also, if they've applied at Bank Breezy, who do they go ahead and email Wade, or they have to actually go through the application process?
Start over.
Yeah.
We got to go through
Okay.
the line of credit application process.
Okay,
If they did not apply at D.A.C. already, even if they did apply a long time ago, D.A.C., we've already discarded all that. So
Gotcha.
unless they've got a current active application with D.A.C., they need to start over and go through the D.A.C. line of credit.
okay.
process.
But as long as, so if they're a D.A.C. client, they're good to go. They just need to email Wade if they've already gotten money from us that way.
Not if they got money in the past, because again, we discarded their application. We destroy all
Oh,
that.
gotcha.
So
Okay.
they need to fill out a new app and new bank statements and all that.
Okay.
All
Okay.
right. So the only ones who can not have to do that is if literally they have an application right now where we're trying to get them an offer. And they say,
Okay.
oh, I'd like to get a line of credit instead of this, like the client that it passed, like Domino said. She's got a client right
Gotcha.
now who was him and hawing about the daily payment of the offer, Brad, and Wade presented her. Well, she can switch to a line of credit if she wants. Try to
Gotcha.
apply for it
Okay.
anyway.
Okay.
Cool.
Yep.
Thank you. Thank you. Harlequin, how you doing, Harlequin?
I am doing fabulous, David. Super excited about this. Because I think in my email, or in one of my messages to you today, I mentioned I lost $100,000 line of credit last month because we didn't have it then. So
Mhm.
I'm going to go back to them. But a couple of questions for you. You had made a comment that sometimes these are reported to Business Credit Bureau, or is that for
Business.
just business?
Business, unless you don't pay, then it can go to your personal because you're personally liable.
Okay.
But they
Okay.
report and I don't know about all providers. So I know some providers do. That's why I said it the way I did. I don't want to say they always do because some providers may not. But I know some of the providers from the matrix up here actually report to the Business Credit Bureau.
Okay, so Dun and Bradstreet.
I don't know who the business credit bureaus are that they report to, but it says it helps your business credit bureau. So I'm
Okay, yeah,
guessing
usually that's
because I don't know of
DA.
anyone else. Yeah, I don't know of any others.
Okay, all right, and then because I know that they're gonna ask, do we have any feel yet for what range of that weekly interest rate is going to be?
Yeah, 0.69% to 1.39%. It's a range.
Okay.
Now, sometimes will they do lower? Yeah, sometimes could it be higher? Possibly, I doubt it, but it could. So that's kind of the range. But we had an offer today. We always say 1.19. That's if they pay it off in 30 days. So we say 1.2 to 1.5, but it's usually we've been getting a lot of offers for business funding right now, 1.28, 1.26 for 18 months. It's crazy. So that's lower than we even quote. So sometimes it may be lower than the amount, but we've pretty much been told to expect a range of 0.69 to 1.39% per week.
Okay, awesome.
All right.
Well, thank you.
Thank you.
And thank you, Wade, to both of you for working on this and bringing it to us, because I'm super stoked.
Team effort. It's all you. By the way, we wouldn't have this if it wasn't for the production we're doing as a company. So, congratulations to all of you. You guys give us the tools we need. I'm talking to a large investment bank right now about high-end funding without having to do anything but refer. And the only reason we're at the table is because the thousands of applications we submitted in January. Without those thousands, they don't even want to talk to us. So you guys are making our job easier. Wade does, have relationships that he's garnered because of his experience and his integrity and because of how he represents and what Brad does and Lindsay. But without production, it doesn't matter how nice Wade is and experienced Wade is. They don't want to go to work developing something for us unless the production's going to be there. So good stuff. All right. And of course, Sharon and Morgan too on the support side. Bill Shaw, how you doing, Bill?
I'm doing great, thank you. Hope everything's well with you. Question, to withdraw from the line, are they going to be getting a debit card, checks, or is it going to be an online transfer to one of their bank accounts?
Online. Some you can even do it on the weekend. But usually it's during the week online. And there's $1,000 minimum draw. I forgot to tell you that $1,000 minimum draw. Okay. So when they take the funds, they're getting 1,000 immediately. They can't get a line and just let it sit there like a credit card. They must take 1,000 first day minimum.
Gotcha. Okay.
That answer your question?
Absolutely. Thank you.
All right. I had that exact same furniture in my office. I was going to ask you if you bought that from me. So it reminds me of my office. Sharon's probably saying the same thing. PK, thank you, Bill. PK, what do you got, PK?
Hey, David, I just had one question for clarification. I thought on Monday you had stated that when business owners apply for this business line of credit, that there will be a hard credit pull. And I don't remember you talking about that in this meeting. Is there no hard credit pulls at all?
No hard credit pull, soft credit pull.
Okay, awesome. And then the other thing, I just want to make a comment. Thank you so much for this. I don't know if you remember, but I'm going to say it so that the agents can hear this. And I really want to get Matt, like, the Matts are all riled up on this. But back when Wade did the training on customer financing and we were having the Q&A, I had stated to enable that one business owner asked for a business line of credit, and we didn't have it back then. And that's every customer that I talk to one-on-one will ask for that. So this is great news, and everybody needs to really get excited about this. So just wanted to remind everybody about that last year.
We all need to flip. We all need to flip. I'm with you, PK. I'm excited. And you're right. I appreciate the reminder. There's no question. We knew this would help. It's how I started one of my companies, was with a line of credit. And it was great to only pay when you need it instead of pay just to have it. So thank you. We've got Katie Sprinkle now. Katie, how you doing, Katie?
I am wonderful. How are you?
Good. You're probably realizing the thing you questioned me on to make sure you understood is completely no longer the case.
Yeah, totally.
For everybody now, but yes.
I've got a new one for you now.
Go ahead.
Just
I
the
like it.
US,
That's
or are we going through Canada too?
US only.
Okay.
Yep.
Good deal. Thank you.
The reason for that isn't because of our partners. It's because of our partnership with Longevity. So we can't do business in Canada while partnered with them. So that slows us down. That's the main reason. All right. So there's other benefits, but that's one of the drawbacks. We were in Canada when we partnered with them, actually, but we had to pull out. Are you in Canada, Katie? No. Okay. You just have clients there. All right. Any other questions? No comp plan questions? You guys totally get the 20,000 to become a qualified client? Ellen Wynn had her hand up, but she left. Maybe she's no longer available to talk. She had her hand up for a little while. Anyone else have a question or comment? Nothing? Wade, why don't you share something you need to share, and then I'll bring us home. Anything you need to share?
Yeah, guys, this probably is another one of these game changer things. It's one of, and as excited as I am, I'm not as excited as I am about what else I know is coming. And I'm still really excited about this because I can see on my end where I can do a double funding for you. I can get them to do the line of credit, say, oh, by the way, I can go ahead and get you this funding on top of that. And they say, well, you can, and sometimes you can do this line of credit and they need 100,000, but they only got 50 on the line of credit. Maybe I can get them 50 on the other side. So I see something really big here. I just want to reiterate one more time. When we get a decline, please don't email me upset saying I know they got a 700 credit. How can they be turned down with a 700 credit score? Well, maybe they murdered their wife 14 years ago and they got off after a couple of years in jail, or maybe they've got some financial issues, or maybe, I mean, you don't know what that deal is, and they're not going to tell me. So all I can tell you is the answer is going to be they did not qualify for they did not meet all the credit qualifications.
Right on. And I'll just piggyback on that. These are not personal loans that rely on personal credit and debt to income of your job. These are based on the strength of the business along with the credit score. If the strength of the business, if they look at their bank accounts and they see they haven't paid they paid the utility for 3 months and haven't paid it in 90 days and haven't paid their employees in 3 weeks and haven't paid that, you can see certain things on bank statements. They're going to say the strength of this business is suspect or the average daily balance is too low. There's a lot of reasons. So thank you, Wade, for reiterating. Don't ask us to explain all the multiple reasons, just they're not approved and we don't know why either. We're not told, you're not told. All right, we had a couple hands come up, so I guess we're not done. So this is the last chance. Raise your hand now. I'm going to ask you, and then we're going to end this. I'm glad you asked. So Marco, you got your hand up. What do you got, Marco?
How's it going, David? I just had a question. All of the stuff that you showed us with the compensation, is a person assigned to doing that, or is it automated?
Both.
Okay.
Right now, this will be manually done until we've done it for a little while to make sure the right things are put in the computer.
Got it.
Yep. But right now it'll be manually done.
Okay. Thanks, sir.
Thank you. And then Anthony Bryant's got his hand up. What do you got, Anthony?
Yes, sir. Thank you. My question is for Wade. I have a customer that I'm gonna try to get them qualified for the line of credit. Will he automatically check to see if they qualify for the D.A.C. loan as well?
Sorry, I was sending out contracts for funding. Absolutely, 100% of the time. I'm never not going to try to get both. Never not going to try to get both, and that way we got a lot more ammunition. And I'm gonna tell you, it's gonna be a pleasant surprise for a lot of them whenever they can get both.
So, and sometimes you'll have both offers, but they may only qualify for one. Other times they get both offers to qualify for both.
Yeah, exactly.
Yeah. Okay. Cool. One or the other, that is, not just, okay. Thank you, Anthony. Did that answer your question, buddy? It did. All right, Wade. Thank you, my friend. Let's go to Nicholas DeHame. How you doing, Nicholas?
Awesome, awesome. Can you guys hear me?
Loud and clear.
All right. No, I'm just stoked, excited. I'm sure everyone else is. And I think we just got a package go in, so we'll see if he qualifies for both. But it's not a question, it's just a message to Wade right now. When I get, and I'm going to, up to $500,000 in total lines of credit. I mean, for an example, 10 clients of $50,000 in lines of credit, so that's $500,000 in total. I'm going to ask if it's possible to get my own personal bobblehead when I hit that range. It's that's possible, but I'm going to get there. So.
Oh boy, he's got to get his now.
I'll talk to the man. Little man here and I talk a lot because I'm working a lot. So we'll discuss it.
All right, sounds good. Excited, guys. Thank you.
Love it. Hey, you know what, Wade? Do you have any numbers? Thank you, Nicholas. By the way, congrats on your funding this morning. Do you have any, Wade, any numbers on how often lines of credit are reused? So if someone has a $50,000 line of credit, does that equal 80,000 in draws a year, or 180,000? Or do you know anything along that line?
I don't. I really don't. I don't. I did talk to one of the funding managers with one of the, and they said that, this is something that you're going to be able to. They'll use 100% of it like 3 times a year or 4 times a year. I said, well, what do you mean? He said, well, they'll take it and pay it off, take it and pay it off, like you said. And he said, there's a big majority of them that will, but I don't really know what those numbers are.
Yeah, I think we'll come to see. And I'd imagine the newer they are in business, the more often they're going to be swiping through it and using it, because there's always something new to buy when you're a new business. You buy it, pay it off. Now you go, okay, I need to get a new sign for my building. Okay, that's $8,000. Well, let's do it. And then let's pay it off over 90 days. Okay, now I need to buy new counters for the back. There's always stuff to get when you're.
Yeah, he said that one thing that's very prominent that they do all the time is they use it to advance payroll.
Yeah.
On a weekly
I
basis.
can imagine making payroll and then paying it back a week later when you get paid on your deal. Yeah. All right. Brian Hinman's up. How you doing, Brian?
There I am. Hey, yeah, thanks, man. Doing great. This is fantastic. The question I had is, are we gonna get paid? I know the pays the 30% like it's supposed to be, but is that gonna be paid daily like the other loans, or will that be paid weekly or monthly?
We are paying them daily.
Okay.
Personal commission, but they may not be paid next day because we're not necessarily notified the day of a draw. So the day we're paid, you're paid the next day. Okay.
Awesome.
So if we're paid on Thursday, they may draw the money on Tuesday, but if we don't know about it till Thursday, then we're going to notify you Friday morning that you had a draw, and we'll ACH it to you that day.
Awesome. Thanks.
And by the way, unrelated to this, Marco's got his hand up again. We'll take Marco's last question, and then I got something else about pay with you. Go ahead, Marco. Marco Washington. Yeah, you're on mute. You're breaking up, my friend. Yeah, you're breaking up, buddy. Sorry. If you could do it, Marco, we can't hear you. If you could do us a favor and type it into your chat box or email support, because we're going to bring this home now and end it up. 2 things I want to tell you about. This is very exciting. This is going to create more residuals. It's going to create a lot easier way to retain your engaged qualification. And it's also going to be a new way to get new clients. And many times they're going to draw 20,000 plus. Like in the example over here that I gave with 0 draw fee, but $20 a month. Do you know if you take 20,000 up front, they waive that $20 a month for 6 months? So there's going to be an incentive for them to draw 20 on the first draw. It's not our incentive. That's one of our providers. So there's various neat things with our providers that'll help incent more drawdown. They don't get paid unless money's drawn. So they're always trying to find ways to make it more appealing to draw funds down, right? And we only get paid that way too. So great partnership we have. They love the fact that we don't charge any fees for our customers. We don't charge you anything. We're only paid when there's successful fundings that occur. We bring the right type traffic. They love that. Now, this is a great way to retain qualification, as I was saying, because of the amount of revenue, and get new customers who aren't interested in working capital advance. Go out there right now to your website. And if you go to your Facebook page and you type in davidallencapital.com/line-of-credits/ your ID number. So davidallencapital.com/line of credit / your ID number, and you put that on Facebook, it's going to pull up a picture. And if they click on it, it goes to it's going to show up a picture of the image. If they click on it, you're going to get a line of credit customer. There's a lot of people out there who don't have access to line of credits at 550 FICO score, 1 year in business. That image needs to be updated because it says 2 years. So we're going to update that. It'll say 1 year very soon today, like when we're done here. But share that, get the word out. When we launched Bank Breezy, social networks were ablaze. Literally 30, 40,000 applications in a month from social networks. not from advertising, from all of us telling people and telling people and telling people, posting in groups, posting in groups, posting in groups, posting in groups, posting in trucking groups, posting in small business groups. Guys, we had people making more money then than they've made since, and they stopped doing what they were doing. Let's get loud. Let's get vocal. When I mean loud, I don't mean like I am right now. I mean present in a lot of places. Get the D.A.C. name out. I will tell you that on Facebook, we've spent now over $18,000 on Facebook ads to bring awareness to the name David Allen Capital in the last 2 months. That $18,000 has generated a lot of you clients because we see the attribution. A lot of your clients saw 6 of our ads, and we are not getting credit for it. You are. So when you get word out about David Allen Capital right now and Bank Breezy, you have the benefit of, they may have already heard of us. You don't know they've heard of us because we're not advertising to you. That costs us money. We're only advertising to business owners who've never applied with us and business owners who are not reps in our company. We can exclude who we want to see the ads. Some of you are still seeing them, but we're making sure we get it to people who've never applied with us and new people. That means they could be your friends. Business owners you may know may have saw the D.A.C. logo 4 times in the last week, and you put a post up and they're going, hey, they've been advertising to me. I'm jumping on it. And you're going to get the credit. So get the word out right now. Don't be playing low. Stay plugged in because you know there's going to be a lot coming about all this, and get active sharing it and watch what happens. And when you've got 20, 30, 40, 50 clients on this, your residual is going to be, come on, lights out. Every draw of 10,000, if you're amped up, come on. You know, it's $3,000 times 6%. You're making $200 per draw. If you got 50 of those a month, do the math. It's 10 grand just in draws. It's not hard to get $10,000 draws. You might have $50,000 draws, right? So get the word out, and don't forget recruiting. Recruiting is how you build your portfolio of D.A.C. agencies. We are going to have a PDF coming soon. We are going to have marketing materials coming soon. Right now, it's just the link to your site and your good old-fashioned word-of-mouth efforts, just like old school. God bless you all. Wade, thanks for making this happen, my friend. Sharon Morgan, thanks for gearing up for support to take the questions. Brad, thanks for being on here. Lindsay, what you're doing with renewals. We got a great team, and we're all bursting at the seams with what's coming next. This is just the beginning of some neat